All right, everybody, this is John. Welcome to the premium video. And let's just kind of dive right in. We're going to take a look at what's happening with the markets and all that kind of fun stuff. Of course, we had a long weekend. I went to cash for the Gold Room account over the long weekend. I actually did not even add a trade today. And I'll talk more about that in a second. But what was nice about that is just it's been such a pretty intense back and forth that just being able to take kind of that mental vacation. What happens is that when you got a lot of positions on, you tend to kind of look at the markets from the perspective of those positions, right? Versus just kind of looking at the market as kind of an inanimate object and what's happening. And there's a couple of things that really stood out to me. And the first one was simply, I've been through a lot of what I would call volatile kind of slop. I don't even know if this is a correction in the indexes, although it's certainly a correction in a lot of stocks. Note that the indexes here, they're down, what, 18-ish%. But there's a lot of stocks, Square, Shopify, the list goes on and on and on, that are down well over 60%. This is the only time that I've ever seen the markets like this where the indexes are only down about 18%, but there's a record amount of new lows, like 52-week lows. So it's a crazy market, and I've said this before, but a lot of this is just kind of the environment of high valuation stocks are being walked down to what would be an acceptable valuation in a market where interest rates are being hiked, potentially, who knows, and then balance sheet is being contracted. That's obviously what the Fed has indicated. Maybe Putin has other ideas and he's going to start a war, and then everybody's going to have to say, wait, we can't raise rates yet. Who knows? So, that's a little tongue in cheek, obviously. So, one of the things that I had looked at over the weekend is the concept of, there's some things. Well, we'll get to that in a second. Let's look at the indexes. So S&Ps here, we are, of course, below that 200 period simple moving average, that all-important level. We do have this squeeze developing here, and I've been watching this, although the one trend I've seen since really December is that long squeezes and even short squeezes to an extent have failed. So, the long squeeze here in October ended up ripping much higher. This squeeze fired and then petered out. So why did it peter out? Okay, and then this squeeze is kind of trying to fire, and momentum's going higher, but price is going down, and so it's a little odd. So if we're looking at this, then we can see that we've been trading in a range since we had these spike lows. We've kind of established a lower boundary, and then since then we've been trading in a range, a lot of it between these two snow lines. These are voodoo lines between 45.38 and 43.71. We're below that the last 2 days, and so the question is, are we going to be able to kind of get back in there? And then let's take a look at the NASDAQ. And so for the NASDAQ, and of course, I've been watching some of these key levels here. That's the lows. You can see that last night we actually kind of went in there a little bit. After hours, we're up 57 points. So it'll be curious if we get kind of a, we got the aim here going. So remember, when we get that, that just means that the downside patterns here are exhausted. And so the question is, and same thing, we got the squeeze and all that kind of fun stuff. And so the question here is like, okay, well, again, the indexes is down, what, 18, 19%, but there's so many stocks making 52-week lows. They're down 60, 70, 80%. Think of all the big names, Zoom, Adobe, Shopify, PayPal. The list goes on and on. Can the Nasdaq, actually fashion some kind of a rally? And when I say rally, I certainly don't mean a rally that's going to take us to new highs. I certainly do not expect that, anytime soon, possibly not even this year. But the question is that, are we going to be range bound for a while these valuations reset, or are we just going to keep rolling over? So what I'm looking at here is that and I've talked about this before, is that kind of the perfect scenario for the indexes in terms of being a dream killer and getting everybody is we just form this massive head and shoulders top, but that would imply that we're going to be able to actually rally and close to that level and actually set up another shoulder. It may not happen. That's what I've been looking for, and so I've been looking for the potential that what's some evidence that we might get some short covering into the end of the month that that's going to happen, right? And so it's certainly been something where we've had a couple of false starts and it just can't get anything going. So does that mean that the squeeze is just going to fire short and we just roll over and die? So some of the things I like to look at here too, and especially with all the war talk, is there a true risk-off attitude here, meaning there's a flight to quality? We are seeing bonds going higher. We all know, that the bonds have been falling. It's a reflection of interest rates, anticipation, and stuff like that. Mortgage rates are now at 4%. So they're rallying a little bit. So it's a little bit of a flight to quality. It's certainly nothing that's in panic mode. And that's one thing I've noticed, is that even though there's talk of war and all this stuff, there's not really a lot of panic. There's a lot of volatile action, but not a lot of panic. But what is moving is there's some crazy moves in like grains. Like today, corn, wheat, soybeans, exploding higher, and these are showing no signs of abating. This is a combination of inflation, combination of shortages, and anything with war talk is oil, food, gold. And if we take a look here at gold, kind of the same thing. It's kind of frankly been a muted response considering all of the war talk, but we did, the idea that we could rally up to 1900 to 1920 on this run. This daily squeeze is about over. As you guys know, there's this huge monster monthly squeeze setting up. I think it looks great. The only thing I'm wondering here on this is that do we get that multi-month of consolidation? So here you can see that we've obviously turned the corner here on momentum, and when this happened last time, we did get a nice about 100-point give or take rally. We've gotten that now, and then we traded sideways for 4.5 months, okay, before we fired. And this could very well fire now and we explode to the 2200 to 2400 range, or we could consolidate for 4 or 5 months. The bigger picture here is that for things like bullion, which I'm a huge fan of, obviously we don't need to worry about timing it. What's trickier is, with futures, you don't have to worry about premium decay, and you can just roll the contracts, but that gets hairy if there's some big pullbacks. And so I do want to look at some longer term plays on GLD here and just get prepared, because I do think that's something that's going to take off. We may get a couple more months of consolidation, but it's kind of one of those things that you just want to have exposure. All right. Okay, so what are some things that I've been looking at here? So the first thing is, so the benefit of being in cash on a 3-day weekend is you get a lot of time, and the only thing that was missing, frankly, was a beach. That's when I kind of get my best, like, all right, I need to step out of the markets and see what's happening and what's going on here. And so here's an example. So this was a trade that I did back in January. Here's a 2-hour squeeze. Tesla, even if it had kind of a head and shoulders reversal here, and so I went long. And what happened is I went long, literally right here, and it even fired long the next day, and then just got annihilated. And this has actually happened quite a bit, where I've seen setups that, and even to the downside, where it's like, oh, here's a squeeze setting up to the downside, and then it immediately reverses for a couple of days. And so it just got me to thinking, and I've talked about this before. I'm a very small investor in this company that trades stocks and futures based on AI, and this is literally the computer. It's a $14 million set of hardware. You can see all the drives and craziness that's happening, and they don't have screens. They don't even, and these are like PhD rocket scientist guys. They're not checking quotes. They just run it off of a laptop. And so they have like 128 AI algorithms being managed by a dozen manager algorithms. And what they're doing is just kind of looking for stuff. And what was interesting about this is I was kind of like, okay, I know this stuff is complicated. Are you guys looking at nuances like internals? Are you using things like the squeeze? And they're like AI is not that smart. It doesn't understand nuances. It just understands simple things. And so for simple things, what it came down to was price. And it was very, very superior in understanding what key levels are important and the probability of those levels holding. Okay, so why am I mentioning this? Because what I'm seeing now in this market, and I've never seen this before, is how much machines are dominating the action. And it's not only a combination of more and more firms switching from humans to machines and utilizing the kind of the AI, the intelligence of the AI. And it's not so much that they can outsmart a human, it's just that they're unemotional and they can look at thousands of things at once. Whereas as a human, we're like, we're focused on our two stocks, right? So what I'm getting to on this is that they're really good at understanding levels. And when price action becomes irregular, they take act. Okay, they understand the nuances of price action. And so when I was talking about the squeeze and why it failed, I come back and after I take a look at the things that they're doing is just basically this. So what happens with these levels is that anytime a stock gets up into the secondary level here, and all the AI kicks in and says it knows statistically there's like a 7% chance that we're going to close above this. Okay, then they come in and sell it. Well, guess what? I took a squeeze basically right at this level, and what I didn't know is that the machines were attacking that level. They weren't attacking me, they were attacking that level. And so this suddenly was kind of a game changer in the stuff that I'm looking at. So not only in terms of targets, but in terms of length of time in the trade. And then if I do like this squeeze fire to the downside, right? Well, guess what? If it's one of those things where it's for the week, it's going to stop here. So if you've got options that are expiring this week, that's great. You want to take it off, and then the next day you're going to see it gets rejected, and so on and so on. So anyway, the short version is I'm doing a webinar on this. If you guys haven't seen the webinar, certainly we can get you a copy of it. But I just want to make you aware that this is a tool that we're going to be releasing out. It's the Quant Pivots tool. Right now it's for Thinkorswim. We're looking at what else we can do it for. But the idea with this is that trading without this at this point, I'm finding is blind. And so I'm adding these to my charts, going through all the setups, and then what I'm going to do is on not this Saturday, but next Saturday, which is the first Saturday in March, I'm going to do a class on this. And so I kind of focus on the weekly wires because the idea is to kind of dial back. And this was the idea of like, hey, let's just crank out 2.5% a week. Although this isn't just about spreads. It's more about, okay, here's a level. Yeah, let's do a day trade and let's run into that target, right? Or yeah, let's do a spread or anything like that. So it's the idea of the weekly wires concept is there, but we're using this much different. And so this basic includes the strategy class plus the tool and an indicator install. And then of course, if you want to do live trading and all that. But anyway, the link for this is simplertrading.com/wire. And it's going to be, it's stuff like this when you kind of recognize that the market has changed. This is the way to take advantage of it and trade, basically with the machines instead of getting slaughtered by them. Anyway, hope it helps. Have a good one, and we'll see you at the next update. Hey, John here with Simpler Trading. Thanks for watching. If you enjoyed this video, comment down below and let us know what topic you want to see us cover next. Also, be sure to subscribe and click the bell icon so you can get notified when we release new videos. And if you want to watch us trade in real time using our own money, go to simplertrading.com and learn how to sign up. Good trading, and we'll see you next time.